Tom, great to have you on the program. Thank you so very much for joining us. We're seeing pressure today, Tom, and again it's about global growth scenario, of course, whether it is actually going to be positive or negative. Spain once again probably in the second recession since 2008. Do you think that this is just a knee-jerk reaction to some of the negativity that's coming through from the Eurozone and globally as well? Or do you think that we could actually just see a spike to the upside like we normally do when oil hits 117?
Good afternoon. Yes, definitely the market is being influenced by these by the economic data that we're seeing today. I have to say that in terms of looking, further forward, talking to dealers in the market, the message that we're getting is rather that the risk is on the downside than in respect of a spike to the upside, as you mentioned. I mean, basically, what's happening is that as this really negative data continues to come through, the sort of long-term perceptions for demand are shifting down considerably, and people who might have been expecting or hoping that Europe might enter into a sort of a growth period in the coming quarter or two are beginning to really sort of put that off and put that back for some period of time. So in terms of the oil market, the perception is that it might take longer for it to get tighter. So it seems to be something quite fundamental really that's driving it today. Okay,
so we're worried about growth in the overall Eurozone region, Tom. So let's just take a look now at the exports out of Iran. China importing a whole lot less crude from Iran. We know that Libya has been exporting a whole lot more, and we keep talking about the supply-demand gap. I know we were alluding to earlier, a couple of weeks ago, we were saying that perhaps there isn't such a huge gap as one had anticipated because demand is starting to soften. Are you concerned at this point? Do you think we're starting to see a normalization on the fundamental front, perhaps not really filtering through as yet to the actual price?
Well, the OPEC, the leading figures in OPEC, like the Saudi oil minister, continue to say there is no shortage of oil in the market at the moment, that the market is balanced. And that is generally a view that we would hear from chief executives of big oil companies, etc. as well. In terms of the perception of a tightness and high prices on the back of that is really, people looking forward. And the market tends to be driven more by where people think that supply and demand will go rather than where it is today. So that's really the picture that the traders are very much focused on. And, looking ahead, you mentioned there the Iranian barrels going offline. I mean, that is definitely a bit of a concern for the market in terms of supplies. Iranian exports now seem to have gone from 2.3 million barrels per day down to about 2.1 million barrels. It could go a lot less. China, although it hasn't imposed its own sanctions, is reacting to sanctions being imposed by the US and elsewhere. So we've got these two factors, really, the global economy and then Iran pushing in different directions. Today, at least, the negative economic sentiment is driving things.
Tom, what about what we've been seeing from a sanction front? And you keep talking about this, but the truth is we don't actually have full sanctions in place as yet. It could actually come to the fore in July. I remember you were telling me about a specific meeting that occurred a couple of weekends ago. We know that things are starting to soften up somewhat. Are you feeling hopeful that the scenario could change? I'm sure that you do speak to a lot of the experts, and I'm sure Iran wouldn't shoot itself completely in the foot. So could we be optimistic down the line?
Yes, there were some positive developments with respect to the nuclear program there. Obviously, the Western powers believe that Iran is trying to pursue a nuclear weapon. Iran denies this and says it has the right to enrich uranium. Now, but however, it did say it was prepared to sit down and talk about that. And therefore, there was some optimism that could be the basis for progress on that issue that could in time lead to the reduction of sanctions. Now, last week we had a G20 meeting at which it was discussed the possibility of having new sanctions or increased sanctions. So it is a possibility that the Iran story could go in both directions. And as you mentioned, the last time we were speaking, it looked like things were moving more positively there. Maybe in recent days, it hasn't certainly progressed very much in reducing the tension. So that's what we'll have to see in really it's a matter of how things develop in Tehran and what they really feel is in their best interests for moving that issue forward. And their best interests, of course, are twofold. One is security, or their perceived need to, advance that nuclear program. And the other one, of course, is being able to sell its oil at a reasonable price on world markets.
Tom, if we could also just touch on that Russian GDP number that was out for the first quarter, coming in at 4%. Some would say it's not that bad. Others think that we should have actually seen a much higher number. Do you think that we could actually see a bit of sensitivity within the Brent crude market if all emerging markets actually start to disappoint to the downside?
Well, the emerging markets are the driver, or have been the driver for some period of time. That's where companies are looking for their growth. And in terms of commodity demand, that's the only place the growth is. Oil and gas demand is falling in Europe. It's pretty flat to the downside in the US. So, and when China cut back or scaled back its growth ambitions for the year, that certainly sent a ripple through all markets. So, seeing Russia possibly not being as strong as some people might have hoped for. And indeed, I've spoken to some companies recently who have said that their growth in Russia is not, just expanding their business there is not what they would have hoped it to be. So certainly there is the possibility and an increasing concern that emerging markets will not be the driving force for either the global economy or for commodity demand going forward. So the Chinese and other impacts on the oil price is not just a one-way ticket. I think we're beginning to see.